Hello, my name's Tom Elliott. I'm a Director of Bueller Capital, and this is the December quarter share market update. Well, we at Bueller run three main internal portfolios. I'll deal with each of them in turn, but firstly a general comment on the market. Markets finished the year in good shape in Australia following good offshore global leads. Share prices around the world did extremely well in 2013. Of course, 2014 is anyone's guess as we see headwinds coming from China where the economy appears to be slowing. That's counteracted to a significant extent by the rebirth, if you like, of the US economy. Also seeing the A-dollar get hit quite hard. As I speak right now, it's hit a 3.5-year low of just 87.3 cents. That can be bad in the short term for equity prices as foreign investors decide to get out of our market, but it's actually good for longer term foreign investors who get more bang for their buck when they're converting whatever their foreign currency is to buy Australian shares. Okay, firstly our growth portfolio, and by growth we focus really on the top 200 stocks. We decided to exit our position in Orica, the explosive and chemicals maker, during the quarter. We felt that there's been a lot of volatility in commodity prices. Again, that's associated with uncertainty about the Chinese economy, and Orica didn't offer the sort of continued value, if you like, that we've seen in the past. However, the fall in the A-dollar meant that, and continued fall, and one we think will probably go further, meant that we decided to look more at companies that earn a significant proportion of their earnings from overseas, and to that extent we established a position in 21st Century Fox, which is of course the American or the offshore part of the old News Corp. Of course, now that Fox is going to be exiting the index, we will have to review that position. I think it's a pity Rupert Murdoch's doing that, but it's a very understandable one. In our income portfolio, where we really look at top 100 stocks and try and pick companies that have better than average dividends that are sustainable and which will increase over the longer term. We sold our position in Amcor. Amcor is a very good business. The problem is its share price has rallied to the point that its dividend yield had fallen to only 3.5%, which is well below the average for the top 100 stocks. We also decided to reduce our weightings in the banks. The banks, in particular CBA, had a stellar run over the past couple of years, but really credit growth is grinding to a halt. We believe that the fall in interest rates that we've seen over the past 18 months has probably run its course now. As a result, it gets harder and harder to find reasons to keep overweighting the banks. So they are overweight in our portfolio, but to a lesser extent than was once the case. And we've also reduced positions in stocks like Wesfarmers, Woolworths and Telstra, mainly because these stocks have performed so well. With smaller positions in our income portfolio, we've decided to increase them slightly to make them more meaningful. In our takeover target portfolio, which is where we try and predict stocks that have a higher than average possibility of being taken over in the next 18 to 24 months, here we look at the top 300 stocks to give ourselves a slightly broader array of shares to choose from. We decided to buy into Mortgage Choice. We think that Commonwealth Bank, which owns 22% of Mortgage Choice, is an excellent candidate to try and take over that stock. We also started building a position, I should say, in Webjet. However, we removed Brambles. It demerged its recall business. We had bought the stock for that demerger. Once it occurred, we sold out at a small profit. And good news for investors in our takeover target portfolio, Investra, which we'd held for some time, had not one but two takeover bids. The first bid was by Australian Pipeline Trust. It was a reasonable bid, around about $1.10 a share, but not quite enough. We correctly bid that Australian Pipeline Trust would increase that bid, and they've done just that. And the new bid is worth around $1.18 to $1.19 and has been recommended by the Investra board. All right, well, thank you very much for listening. I'm Tom Elliott, Director of Bueller Capital. Do contact us if you have any further questions, and I look forward to your company again at the end of the next quarter.